Okay, welcome to episode one of the Spycast series, where we are trying to give you the unfiltered version of what it's like to be a day trader trading spy. And the topic for the first week is going to be losses. Okay, losses and everything to do with losses, how it affects you, how we cope with them, what kind of losses we've taken, and what you can do to prevent yourself taking losses in the future. So I don't know about you, but I think there is a misconception on the internet where there's so many gurus posting their results. They're driving Lamborghinis. They're showing screenshots of 20, 30, 40,000 pounds a day, and people seem to think that these ordinary looking people um, doing this, and they get this misconception that it's pretty easy to do. Now, if you decide to just start trading today and you decide to start trading options, your natural instinct is going to be to go on Instagram and start looking for some traders to follow. And the first thing you're going to see is someone that's making 20, 30, 100K a day. But what people don't realize is the back end of what's happened before that. What do you guys think?
Definitely. I think instinct is people wanna make money quick with minimal effort. And, I think, when you hear stories about people, and we've all done it, right? Where you've made a significant amount of money in a very short period of time, there's a misconception that it's really easy to do that. And yeah, you do have days where you can make, depending on how much you're trading, you can make thousands within minutes. But that's come on, people not seeing what kind of effort you're putting in the background to find that big move. Those moves don't happen every day, right? And there's a lot of analysis, a lot of work in the background that goes on to find that perfect entry like that. And to your point, there's a lot of gurus that will just speak about all the positives of trading, and there's so many positives to trading. That's why we're all doing it. But and there's a big but, and that is there's a lot of risk that's involved in it, and we're all going to get into it in a minute. But I think for me, one of the biggest um, eye openers really was understanding how to minimize my losses first before I can really try and make money. Because we all know it's easier to lose money than it is to make money in this game. Particularly if you don't know what you're doing, and most people, the statistic is what is something like 90% of day traders fail. 95% of day traders fail, and that's because they're going into it thinking I'm going to win, I'm going to win, I'm going to win, without first understanding how do I minimize my losses first, and that for me is like is the first thing. But show me how to not lose before I can win. You know,
I think for me as well, they always advertise it on these social media platforms like, oh, you can make X amount, and I've been doing it for X amount of time, and I'm making £10,000 a day or something. But it's all about balance, right? Where you can make X amount of money, you can equally lose X amount of money within the same amount of minutes and seconds. So all in all, it is about balance. But like you say, Aku, that it's about minimizing those losses, and not also minimizing it, but learning how to deal with those, because it's an emotional game, trading. And if you can take a big loss on one trade, and that's you affected mentally for the next few. And if you don't know, or if you're not used to dealing with that, then it's going to be a difficult lesson to learn.
I,
So
I think also as well, like when people start their trading journey, ideally you're gonna probably before you even get onto a program, you're going to follow some traders, and some traders, most you're going to probably see every single day, green day, green day, green day, green day. And what some of these traders do is, let's just say they take 3 trades a day. They might have lost 4 grand in the morning, but in the afternoon they've made 8 and they've posted the 8. So naturally, to their audience, they see this guy's won a trade every single day. Like, surely if I just join his program and copy his trades, this going to be me too. But
Mhm.
and that's a whole nother kind of worms as well. Like, people don't realize that, like, and I always say this to people when they join the trading program. When you start trading real money, load up an account with money that you're willing to lose. And don't get me wrong, nobody wants to lose £500. Nobody's got £500 that are willing to lose. However, when you start loading your account up with the £500 that you've saved to go to Ibiza with your girlfriend, it's worse, because there's so much emotions connected to that money that if you do take a loss, your behavior from that loss will be completely erratic, because there's too much emotions involved in that money that you've loaded your account up with. And also as well, like, some of these traders, like, don't get me wrong, there are traders that genuinely are driving Lamborghinis. So I'm not saying that there's no real traders drive Lambos. There are traders that drive Lamborghinis. There's not many, and most of the ones that do are fake, but there are real ones. But the ones that do, they're deep in the game. Like, some of the traders that I know, Stock Market Wolf, Jadon, if you look at their backstory, they were unsuccessfully trading for 2 to 3 years, making money, losing money, blowing account, opening another account, making money, blowing that account, until they found consistency, you know? So I don't want people to have a misconception where you can start trading, jump in, and you're gonna have 70, 80 green days. Like, you're going to have red days. There's going to have to be days where you take losses. But I always say this to people as well. When I win a trade, I learn nothing from that at all. However, my behavior from a loss of a trade, when the market finishes, I will go back, see where I took the trade, and what signs that I had from the market to say this was a wrong trade to take. And I try and I'd write it down on my phone, the reason for the trade going wrong, and I'll try and avoid it. Now, if you can take what happened in that trade and learn from it, then the L becomes a W, because that's eradicated from your game. But a loss will remain a loss if you repeatedly do the same thing again and again until you learn to not do it. And sometimes it takes 2 or 3 times. Yeah. Like, I'm going to start talking about my trading journey in the beginning. Like, in the beginning, I take 15 trades a day. I'm 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 going to be open, and that's the whole reason for this podcast, is to give you the honest truth of what happens. So in the beginning, I give you my story. I opened up a $500 account. My backstory, for those that know, my uncle came to my house. He started trading. He was trading in front of me, made 16K. He's tried to teach me. I loaded up a £500 account because I had some experience from Forex, looked at a few YouTube videos, and I blew the £500 in 2 days. The next £500, I got to 18K, and then the 18K got blown as well. I scaled up too quickly. But back then, when I look at how I was trading, like, if you see, um, this is one of my worst days, and it was a tip that I got from my uncle that made 16K, but I sized up too much, and I left the trade. I got out of the trade too early. The trade ended up being green, but I lost 4K, and here's a screenshot. Um, and I was taking 15 trades a day. So, like, I'd lose a trade, and then the market would go the opposite way, and then I'd get into a call, and then the market would go the way I originally intended. I'd close that trade, take a put, then the market would bounce again, and then next thing you know, like, you've taken about 15 trades to make 150 quid. Like, your commissions has killed you already, from all those trades. And then it was only since like after the second blown account, I I bought a few courses off the internet. Like I tried everyone's course, took all the good bits from it, and then started like paper trading. Back then, I couldn't paper trade on TradingView, so I had to just like literally write down my paper trades on journaling, and then I turned a £500 account into quite a substantial amount of money. But if someone had said to me, "This is how it's going to be in the beginning," I might have thought twice about getting involved. You know, because I was not ready for that kind of emotional roller coaster that was going. And also, as well, being from the UK, there was no UK course, which is another reason why I've designed this course, or we have designed this course, because a lot of the American stuff was using platforms that we had no access to. So the journey in the beginning, when I look back, there was days where like I was so frustrated with my trading that I couldn't talk to people. I would sit in my room, probably with a PlayStation, angry as hell, like not talking to anyone.
And let's be honest about that as well. I mean, I don't know about you guys, but I still have that, right? To some degree, right? Not like I don't let it destroy my day, and certainly I don't. One thing I think I've learned to do. I say I think because I'm not 100% right. It still happens once or twice. I'm only human, right? But the emotion part is such a it's just always there, right? It's always there. Who No one wants to lose money. I did not join to the bullish bear to lose money. I joined it to make money, like everybody else did, right? And whether it's $100, $1,000, or $10, I don't want to lose money. Simple as that, And when I lose it, when a trade goes against me, it's it's tough to sometimes to hold on to that emotion and not feel like shit. I want to now revenge trade, what we call it, right? And I need to make that money back. That for me was like such a big problem at the beginning because when I was $1,000 down, and I was thinking, shit, I need to make that money back, and I try and make that money back, and now I'm $2,000 down, and then $3,000 down, and then before you know it, you've just blown your account, or you've just flushed literally thousands of dollars or pounds down the toilet. And what's that going to do to your mental state for the rest of the day? Particularly, if you haven't got a lot of money in your bank account, and you don't want to do that, it's the worst thing. It affects your mentality, it affects your life at home with your family. You don't talk to your friends properly. It's just not a great place.
Especially like there's two things that really affect me now as well. And this is probably why I don't trade big on a Friday, is because if I take a red day on a Friday, I can't make it right till Monday, and it messes up my whole weekend. Because I know, like, once I look back at the chart after markets close, I'm like, this is where I messed up. Yeah. But I have to wait 2 days now to rebuild my self confidence. And also, as well, if you've only got £500 to your name and you load up your account and you blow that, it's the same sort of thing as me having a red day on a Friday, because now you've got to wait to get another £500 or whatever to load up your account and put it back in and try and fix what you're doing. Luckily, there we have a system that you can paper trade in that time, and it helps. But the emotional roller coasters with losses is, yeah, it's not great.
Yeah, the other thing I get again on, because obviously we're talking about losses today, right? And what leads to losses, in my opinion, right, is, and what I like about our group particularly is most, if not, well, yeah, pretty much the majority of our members are at the same kind of at the same stage, right? Outside of like the senior ones, right? But majority are at the same stage. But when you're trading with people that are making a lot of money as well, like a lot of the other courses that are out there, me as a new trader that's got a small account, I'm looking at, you know, Joe Blogs over here making thousands, and I'm making $20 or $30, and I'm like, sooner or later your fingers are going to get itchy and you're going to be like, I want to make 200-300, and I'm going to size up way before I've even learned anything, way before I even understand what it took him over there to go and make thousands, because I'm comparing myself against him. We're in my mind, we're both in the same trading day, we're both trading the same stock, we're both, watching the same charts. Why can I not be making the same money? And then immediately I'm like, ah, I shouldn't have. If I just went 2 or 3 more trades on that, I would have made 500 instead of making 50 right now. So next time I'm going to do it, and I do it, and then bang, you lost the 50 that you had before as well, and you're like back to square one again.
And you know what people have to realize as well? Those people that are placing those big contracts on a big trade, even though they're trading 100 contracts, 150 contracts, that is still 5% of their account size. So if they've got £100,000 in their account, okay, and they spend 5 grand on one trade and it goes completely wrong, it's not a big deal to them. They've got £95,000 left there to trade. And believe me, no trader that have got skin in the game and that have been trading a long time will never let a whole trade go down to zero. They probably cut it off at 50%. So really, they're only risking 2.5% of their account size. But what they don't explain to the people of the general public when they're looking on Instagram is, I risked £5,000 today to make 20. Okay, all they see is 20k. They don't see the person's risk to reward. They don't see the full account size, which gives people a false sense of this is way easy to do. And you know what? I like even in the group, I talk to people and I say to them, I was like, back in the day, if I made 30 quid trading, yeah, and on a green day, I was happy because you know what? In my eyes, if I made 30, 30, 30, 30 Monday to Friday, that is way better to me than losing 30 on a Monday, losing 30 on a Tuesday, losing 30 on a Wednesday, losing 40 on a Thursday, and then making 400 on a Friday. That is way better because that shows to me that I'm a consistent trader and I can consistently make winnings. And I say this to people all the time. If you're green for the day and it's 20 or 30 quid, close your charts, take it as a green day. Because psychologically, that is way better than being at one point green on the day and then towards the end of the day you overtrade and you end up being red.
The power of a green day is so much. I mean, it can be the difference between you ending that day confidently and starting the next day the same again. Whereas the opposite is you end on a red day, you're kicking yourself after market, you come back the next day thinking, okay, I got to put it right, and now you're taking extra risk, you're sizing up, and if it's not to your account size, then you're going to end up blowing it, right? So the power of a green day, you don't ever underestimate it. Even if it is £10 or £20, ultimately it's better than you were the day before.
And I say,
Right.
sorry, just one more thing. I say this to people, like, once you're consistently making 20 to £30, yeah, to make 200, you're just scaling up. So you might, instead of having one contract, you're trading 3 contracts. But the theory of your entry and exit is exactly the same, and your risk tolerance to that trade.
I think to your point there, right, about talking about risk, right, and in risk reward, shall I say, is single-handedly the most important thing, I think, when it comes to like how to really minimize your losses. And what, particularly with us three here right now, we somewhat have had a little bit of a different journey in terms of where we are right now, right? And I think that's really valuable to the people that are ultimately going to watch this, right? Because you're going to get people that are coming into this because either they need to make more money, right? They want to make more money. They want financial freedom, right? They're sick of their rat race that they're in at the moment. I don't know, I was, right? Or they want to take care of their family, all of those things, right? And some people will come in and think, oh, okay, if I had a big chunk of money, I can make money quick as well, because it takes money to make money, right? That's not necessarily the how it works in trading, right? It's not, right? Just so like, the viewers know, I started with a 6-figure account. right? I started with a six-figure account and I lost it all, right? I lost it all because I did not understand risk reward, really. I didn't understand risk reward. My emotions were way ahead of me, right? I didn't understand exactly what I was doing. I was revenge trading every single day for the most part, right? And it just showed that if you don't know what you're doing, you can and you got a big account, you could just lose it. You just lose it quicker. That's all it is because I didn't understand risk reward, right? I didn't understand. Okay, I've overtraded today. I should stop. Let me come back tomorrow. Do you know what I mean? I didn't understand where the right entry was. Understanding how to read charts, how to understand patterns, all which we teach and what I've learned in the bullish bear. So the risk reward part is so important because if you are entering in the right, entering the market at the right time based on risk reward, based on what you've learned, then you know going back to losses again, when your trade does go into the red, it's not going into the red significantly. It's within the tolerance that you've learned and allowed, and that minimizes it, right? And then so then next time you're like, okay, cool. Based on what I've learned through my analysis, through what we've taught, now I'm going to go in, and then the trade goes your way, and you recover from the loss really quickly, and then you start making money. And then once you start consistently doing that, to what Minesh was saying earlier, once you start consistently doing that, then you've got to the place where Sajid doing it really Sajid does it really well in terms of this is my target, this is where I need to be. I'm going to be very strict with my risk reward principles. I'm not going to size up until I get to that target. And then now once I'm at that target, I can now allow myself a little bit more. Why? Because my account has now grown. Now my percentage, my risk reward, my percentage that I'm working with, whether it's 10% of your account that you should be working with, has now grown. So now instead of it being 1,000, I can now, you know, potentially risk 1,500 or 2,000. But being strict like that is so important. It's so important because that's what's going to allow you to really, be successful in this, in my view.
I think what I did as well is whenever I place a trade now, in the back of my mind, I always have what I'm willing to lose on this trade. So let's say right now I take a trade on MES, okay, and I place one contract, which is 1.25 per tick. I'm willing to let that trade go to minus 15. If it gets to minus 15, I don't care what the chart looks like it's doing. I'm out completely. And then I will not take another trade for at least two candles. So 10 minutes. So I will strictly observe for the next 10 minutes. And then I might not even take a trade then. But if you set yourself up and in the back of your mind have a figure I'm willing to lose on this trade, then you don't have that uncertainty of, oh, it's going back, it's got to 10, oh, it's gone to 9, oh, it's gone to 12, oh, it's gone to 15. Because you don't have a number in your head of what you're willing to risk, how can you possibly make a decision to get out?
Hmm.
You have
Exactly.
to have a figure in your head before you enter every single trade to what you're willing to lose on that trade. And that brings me on to the next topic that I want to cover today, and that is how do you manage the next trades after taking a loss?
Let me before we go on to that, just to finish, just to because where you said, I have to have a figure in my mind about what I want to lose, right? I think it's also important to have a figure in your mind about what you want to make as well, right?
Oh, 100%,
Because
absolutely.
it's to have that kind of winning mentality. First of all, you got to have a winning mentality if you're approaching this business, right? Not you know, shit. If am I going to lose? Am I going to? If you feel like you're going to lose, you've got to be studying more. Simple as that. You need to analyze more. You got to study more. You should not even, this is why we in the Bullish Bear we teach how to paper trade properly, right? So that paper trade basically means is simulation, right? It's not real money, right? But it's the real market, and we teach you how to essentially find the right entry point, so that the risk reward, obviously the amount you're risking, the reward is much more higher than the amount that you're
I, sh-
risking, right?
I should have mentioned that you always have to have to figure in your mind of what you're willing to lose when you press buy or sell, and where you're getting out of the trade if it goes your way. Because how many times have we all held on to a trade that's been two, three, £400 up? Listen. I've been in trades that has been £4,000 up, and then I've closed the trade at £1,500.
It's the worst feeling in the world. It's the worst feeling.
100%. So having a strict exit to where you're going to get out is very, very important. You must have an exit plan for your trade. And listen, you get out of your exit plan. If the market continues to go in your way, go back in. Have the same risk tolerance in the back of your mind. This is what I'm willing to lose at this point, and this is my next target. Absolutely no problem doing that.
I just think the final point I want to make on these losses bit, right, is we often attribute losses to failure, right? But what I learned from one of my trainers at one of my last jobs that I had was fail, all of that translates to is your first attempt in learning, right? And you're going to have loads of these throughout your trading journey. I mean, there was points throughout my trading journey as well. Even whilst I was paper trading, I was feeling good, open up the chart, and I absolutely have a horrid day. But it's easy for me to then end the day there and feel like, oh, I failed, and this is sort of the end of the road. But it's the mentality of going back, reviewing it, and saying, okay, where can I learn from this? And then when you come across that situation again, where you feel like, okay, this is making me feel a little bit uncomfortable, but because of the time you spend on the charts, knowing how this stock SPY S&P 500 moves, you will get accustomed to the way that it responds, what it does, and the certain characteristics that it has. And eventually, for me now, it's getting to a point where if I feel uncomfortable in a trade, I will come out of it, because I know I've spent so long on these charts that if I'm feeling uncomfortable, it's because I've probably seen it before and it's gone against me. So that's my way of determining. If it's making me feel uncomfortable, then just come out of it.
What would you say? I know you want to go on to the next part, Mins, right? But what would you say is like the top, like, I don't know, top 3, 5 reasons why people lose?
Consistency, I think.
Consistency. There's two things that I've noticed from even when I, because a lot of people in the group will message me privately and ask me questions, and one of the things is, I think they don't have an exit plan. So sometimes their losses will be £10. Okay, this is some of them are paying, and some of their losses will be 40. So I'd say to them, why is one loss 10 and one 40? And they're like, I don't know. And I was like, if you look at my losses in on a single day, they'll all be around the same figure. The reason being is because every single trade I take is the same amount of contracts and the same amount of money I'm willing to lose. Your losses can never ever be 10, 50, 20, 70. It cannot be, because that says to me you have not managed your risk to reward. Okay. Secondly, as well, I think your conviction and your edge plays a big part. And what that happens is, for example, let's just say I have in my a lack of pre-market plan is also a reason why people take losses. So say my pre-market plan, I said to myself, I'm going to take a bounce at 460, and I'm waiting. The market's coming down, and the market starts to bounce, and then there's a big green candle when they miss it. So what then ends up happening is they wait for that candle to close, market continues to move up, and they get FOMO, and they think, okay, market's at 461 now, I'm going to enter a trade. Next thing you know, the market tanks. So lack of conviction and not following your pre-market plan is another thing, and obviously FOMO.
I think FOMO is such a massive one, because I think everybody everyone, right? You can not, you could be a novice trader, you could be an entry level, you could be someone who's never traded before, right? But everyone at some point has felt like, I should have bought that, right? Whether that was Amazon back in the day, right? Or whether that was Facebook back in the day, whether it was Tesla when it came out. whether it's Bitcoin right now, right? If Bitcoin ever goes back to 150 or more, right? The people that are skeptical about it now will feel like, damn, I should have gone into it back then, right? That is so prevalent in trading. I know I felt it at the beginning, right? You know, and I think everybody at some point feels that FOMO. Just to your point there, you see the big move, and you're like, oh yeah, the market's moving that way. I'm gonna quickly go in, right? And then it tanks, right? Or a company that you've been interested in go IPOs, and you're like, I'm gonna jump into that today because that's what I'm seeing on the news and shit like that, right? But it's already too late at that point if you're gonna go into it, you know?
It's herding and optimism is called in trading, where like when GameStop got to like
Right,
$190, yeah, and people were still remortgaging their houses because I think it was getting to 1,000, you know, and it's herding, and it's also as what people will see us going into a trade, and they don't understand that like we've planned this trade from 24 hours ago. You know, this is a trade I planned, so I know that the moment it bounces at 460, for example, I'm in already. So by the time it's got to 461, I'm preparing to get out. You
right.
cannot jump in right now, and the lack of pre-market plan, and what people seem to don't forget to realize is that we don't, or most traders, professional traders, do not open their laptop up at 2:15 ready to trade. They don't do that. Okay, they would have looked at the charts when the market finished yesterday. They would have probably been looking at pre-market from 1 p.m. UK time, and then planning what they're going to do, writing down the pre-market plan. So the fact that they've entered at 460, that's their conviction. They were prepared for this. And I always say this to people: if you missed the trade, you just weren't prepared for it. It wasn't yours. But
Mm.
what that's why we set a rule in the group where you have to enter on an opposite trade, on an opposite candle. Like us as traders that have been trading a long time, we know when a momentum candle's happening. So if a level breaks, as soon as that volume comes in, we enter. But as newbies, to avoid FOMO, always wait for the pullback. It will minimize your losses and it will get you a good entry, and your trade won't spend a lot of time in red at all.
I think, Yakub, to answer your question, why do top three reasons why most people fail? I think to answer that question, it's more so what are the three reasons that most traders succeed, right? And we can talk about pre-market plan and things like that, and technical analysis and things. But I think it takes certain characteristics, which is consistency. You need to have your discipline, and you need to have perseverance, right? It's easy to have 2 red days and think, oh, I'm going to quit. This is not for me. But who knows?
100%.
Those next 3 days, on Wednesday to Friday, you could have made back those losses from those Monday and Tuesdays, and some on top, if not more, right? So I think having those three characteristics is really important, and it will even teach you even once you join and you start paper trading and you start having those losses, it will usually attribute down to one of those three things. It's either you're not persevering enough after you've made the losses, you're not consistent in the way that you're trading with things like pre-market planning, analysis, and it's just your consistency with it. You can't have days where you're winning, losing, winning, losing. You need to find a consistent rhythm.
Just one more thing that I want to say, that stat, it says not 90% of traders fail in the first 3 months, and then 99% overall fail. Okay, now I think the general public believe you can end up making the money that they see on Instagram within 3 months. And I'm telling you this now, even if you aren't a member of my course, you are not going to make 4 to 5 figures daily in 3 months. It will take you ages. It may take you even a year, 2 years. But eventually, if you do not fall into that 1% of quitters, this industry and this skill set will allow you to open your laptop anywhere in the world and be able to make whatever you want to make. Okay?
And that stat, I think I mean, those numbers are like crazy, right? You know, if someone was to give me 90%, say, hey, listen, the chance of you winning that is 90%, I'm in it all day long. So, you know, the chance of you losing is 90%, and in 2 3 years 99% just completely go. That's basically everyone is leaving this, right? Because everyone's leaving, everyone is losing for the most part, right? And I guess I'm trying to like, we're all normal people, right? I did not go to school to trade. Do you know what I mean? Right? I didn't work at Goldman Sachs or flipping on Wall Street or anything like that. Right? We learned, this. I learned kind of like the hard way. Really, I always say, instead of saying that I lost money, I just looked at it as a very expensive lesson to some degree. Do you know what I mean? That's the way that I look at it.
I think
Um,
one question, Yakub and Mins, I think we should answer for the viewers is that stat said within the first 3 months, this is how many people fail. But just to give the viewers an idea, do we just want to touch on how long we've spent sort of practicing this, getting to learn it, and
yeah,
come into this stage, right? Because for me, it's taken over a year. I started last year, January, blew my first account, loaded it up again, thinking I was ready when I wasn't. And then once I blew that account, I was like, okay, let me go through everything all again once more, do my paper trading, get consistent with it, and then come back. So for me, it's been 12 months, right? And that stat of most people failing within the first 3 months, that goes back to the lack of perseverance. They've tried something for 3 months, hadn't had any success, and then just parked it to one side. So how long? I mean, how long have you guys been trading or interested in it, practicing to get to this point where you are now?
yeah. I think so. I'll just jump in quickly. So I, when I my I guess investing kind of journey started about during the pandemic. So towards the it was I think it was towards the end of 2021 is when I started doing it. I was like kind of like really blindly investing in like crypto and stuff like that. I'd like heard about options because and I was buying whole shares in companies, and some of them were up, some of them were down. It was very kind of like volatile. But ultimately for me, it was like a real slow uptick. And so then I would start looking into options, and then and it just so happened, Minish and I just like talked, and Minish started talking about options, and I was looking into it, and so I think it was, I really started like diving in a lot deeper around the middle, um, around about the same time. I think around about the beginning of 2022, I think I started going into it. But even then, admittedly, I was kind of like not fully into it, right? I was not fully there, not because I didn't want to, but because I was working, and my job was a little bit more, it took a lot of my time, so it was hard to like really, split my time between the two. But I was still trying to trade like a proper trader,
Mm.
knowing fully well that I wasn't doing the things that we just spoke about, like being prepared, doing the market analysis, all of those things. And that was leading to losses, right? So, so, but on and off, I'd say about 2 years for me.
Okay, so I think I'm in year three, stroke four-ish right now, but I don't think I was fully profitable for about 18 months. It took to be consistently profitable. But I'm just going to share something. If you're a member of the team, you would have seen this already. And this is what I think the journey takes. Now, if you can see, like in your first year of trading, you're looking to make £100 a day, okay, £200 a day. Year two, you could probably possibly make 3 to 500, and then by the end of year three, you can make anything between 1,000 to 5,000 if your consistency is there, okay. As well as that, now £100 a day, people will be like, I'm not doing this for £100 a day. But what they need to realize is these are the conversion figures when it comes to what you can end up doing. Now, £100 a day is still £25,000 extra a year. Now, if most people that are watching this, someone offered you £25,000 extra a day for a couple of hours work a day, you'd probably take it. But eventually, you have to have this long term vision in terms of how to build consistency, how to manage your losses, and where it can get to in the end. Okay.
I think it's also important, those numbers that you just showed there, right? And I think because there's going to be all types of people, right? Everyone's in a different stage of life. Everyone has a different standard of life. Everyone has different, expenses in life, right? And if I'm being like really honest, for me personally, right? When I and now and again, it comes back to the mentality as well. When if I'm looking at something that I can potentially, if I'm making $100 a day and I'll make 25 grand a year. It's not the most exciting thing in the world for me, right? Personally, but it's, it's important to put that out there, because that sometimes it's not, a couple hours work. If you think you're going to just do it a couple hours, well, I just last Friday, I mean, just Friday, we all did it, right? We all sat in front of the computer, we looked at the trades, we followed our market plan, we all came away green, right? But it wasn't a blockbuster day by any stretch of the imagination. I think I came away with, I can't remember, just over $100, and we were in front of the computer the whole day, right? You're gonna have days like that,
Mm.
right? You are gonna have days like that, but it's committing to that. It's committing to, you have to be committed, because those numbers that you just showed there, Min, they are without a doubt in reach. And in this business, in this industry of trading, $100, to make $100, if you become skillful, which is the ultimate goal here, right? You can make that in a second, really, like in a minute. You can make 100, right? You don't need to be waiting there all day for that, right? The bigger numbers, the 5,000s and all of that, comes when you're down the road, right? When you're down the road and you really feel like, I'm a good, consistent trader. I understand how to read my charts. I'm doing the due diligence of analysis, market analysis, right? I'm doing my own research as well, whether that's reading books or whatever, right? You feel like a real confident trader. Those numbers are well within your reach. They really, really are, and honestly, like, Minesh really showed it in 2023, sorry, to the group, about what you can really, really make. And, for, someone, for me, and we've known each other our whole lives pretty much, that's a big source of inspiration, right? Because I
Mm.
know where it's come from, right? I know that you didn't go to Harvard and go and get a flipping a degree in this thing. Do you know what I mean? I knew what you were doing before this,
And
right?
Yeah.
You
and
know,
and and that's what I say to everyone. And I say to like people think that like, oh, because I made what I did last year, I've got some God-given talent. And I say this to everyone, and then I go over this in the course quite a lot. Trading is not a God-given talent like Cristiano Ronaldo or Floyd Mayweather. They're naturally gifted in their field. Okay, they're probably one of a kind of a generation. The only difference between me and any other trader is how much screen time I have had in the past.
Yeah.
And the fact that we only trade one stock means I have got so many hours of watching SPY, which then allows me to understand the stock better.
Mhm.
Secondly, in terms of that figure of 90% and 99%, when I first saw that figure, and uh, this is just my mindset, I always said to myself, I'm going to be in that 1%. I cannot be in that 90 with everyone else. I will make sure I'm in that 1%. And my uncle, who inspired me to trade, said this to me right in the beginning. He said, if you can make £100 a day, yeah, consistently for the next 3 months, you can make 10,000 a day, or 50,000 a day, or 100,000 a day. It's only a matter of scaling. That is the easy part. The hardest part is the consistency, doing it every single day and being able to manage your losses to make sure you're still green for that day.
I
And
think for me, the main thing is as well, like it's been 12 months for me, and I might have been in that 90% who stopped, but for the sake of me wanting to learn it, but also having the access to the likes of yourself, Yakub and Mins, who are already trading live and are making consistent gains out of it. Having that, you can see Instagram traders all you want, but ultimately you don't know that person, do you? And until you really do get to know that person, you know that okay, this person is actually making this for real, and that is more of a source of inspiration. And I think for the group is really valuable as well, having that foundation of members within that community who are being successful, because despite your losses, you're gonna all have someone who's experienced something similar to you. Because, like you say, yeah, all of our journeys have been different. Some of the challenges that I've gone through, maybe you guys might not have gone through it either, because it's all a personal thing, right? It's all a mental game and how you overcome yourself and your own ego. So
Listen,
I think it's
there's been,
great.
there's been many times I've sat here and I've thought to myself, is this really for me?
Mm,
No, especially when you have children to feed. Yeah, you have bills coming out, and you're thinking to yourself, I'm spending at least 6 hours a day on this,
yeah,
and I've taken a loss. I took a loss yesterday, like, and all it comes down to is being able to identify where you're going wrong and correcting it. Because what I always say to someone, and this is a fact, if you take £100 loss on a trade, yeah, there is someone in the world that just made £100. So why has he had a green 100 and you've had a red? That's what you need to think about.
mm,
Because every trade you lose, someone, because trading is buying and selling. So when you're losing, someone else is winning. Just remember that. Okay. So you have to be able to identify where you went wrong. So we're going to move on to the next topic. Okay. And the next topic is, what do you do if you take a trade and it's a loss on a particular day? Well, I sort of touched on this. And if I have a red trade, I will wait for the minimum amount of two candles before I go in again, and I might not go in again. In terms of a daily loss, yeah, if let's just say today I took a loss and I lost £1,000, okay, and I was trading 10 contracts. Tomorrow I will trade 5. I will always size down the next day, no matter what, because what ends up happening is you need something to build your confidence up, and you don't want to be as risky. Don't know what do you guys do when you take a wrong trade?
I think for me, when I take a wrong trade, I need to try and understand why it was wrong first. So once I've closed the position, the first thing I go back is go review the last set of candles, whether that's the 5 minute, 15, 30 minute, or even the daily, right? If I want to look at whether it's just a low volume day or something. But once I've lost the trade, I'll go back, try and see where I've gone wrong. And say if I took a call and it didn't go my way and it's actually gone down, I'll go back and see, okay, well, where were the signs that this was about to drop, right? Because I've missed those signs. So what did I miss leading up to that point where I've eventually closed my contract that I need to remember for next time? So that's what I'll do. I take notes of it to say, okay, next time this happens, you either need to be really careful, tighten your stop, or just get out of the trade because something's going to happen, right? And historically, having seen things happen over the last year, it's now got to that point where I'm like, okay, I'm not comfortable with this. I'm coming out of it. But once I've done that, I'll then look at, okay, was my trend line wrong? Was it in the wrong place? Or is this just another taper? Is it a change of dynamics on the chart? And then restructure everything so that it aligns with what has happened since I've then closed it. To then, okay, say this is the new structure. These are the new rules now set out by that structure. This is the new plan. So once it breaks this structure, only then am I going to take a put. And however long it takes to then break that structure is how long I will wait. There's no set sort of time period to say, okay, I'm going to take a trade in 5 minutes time. If it takes 15 minutes to break that structure, so be it. I will wait until then.
Yeah, I think it's pretty much the same stuff, right? In terms of, ultimately, how are we kind of managing that, once we take a losing trade, what are we doing? And, and I guess I want to talk a little bit about my journey when I was losing big before, right? And what was when I was losing before, I wasn't reviewing anything, quite simply. Do you know what I mean? I wasn't reviewing anything. And what I was doing was, okay, I lost, let's just say, example, I took 2 contracts before and that lost. On the next one, I would just take 4, right? Because I was trying to trying to create that loss, get that loss back and some, right? And that was just leading to even more losses. So, the biggest part really you know, is when you are taking that loss, is reviewing it, just taking a step back and reviewing it and saying, okay, what happened here? What principles? Because if I'm doing my market analysis, my pre-market analysis, what did I not follow here? And let's say I did follow it and it still get losses because listen, the market, nothing's there's and anyone that's going to tell you that their course you know, is like the best and you're not going to lose or whatever is simply lying, right? Because no one's got a crystal ball when it comes to the market. The market will in the end do whatever it wants, unless you're Jerome Powell from the Fed chairman, right? You don't know what's going to happen when this market. You don't.
I mean, I
With
don't think even he does know, because sometimes he'll say something and the market reacts completely the opposite way, right? So
If there is anyone that's probably got their finger on the button, it's him.
yeah,
Literally, the guy's got his finger on the button. But we've all had situations where and again, as hopefully the viewers and people that listen and watch this, right? You'll see in later episodes, we're going to talk a lot more. Saj just talked about structure and break of structure. That probably won't mean anything to you guys right now, but down the road, it's going to mean something to you. My point for saying that is we've all seen almost a perfect setup, and we've done our analysis, we've done our pre-market analysis, looked at it all, and we're like, okay, the market should be going this way now because this is what what all the data says, and then it goes the opposite way, right? And that happens as well. It doesn't happen like all the time, definitely not all the time, right? But you have to be aware of that, which is why the losses and understanding how to keep your losses at a minimum is so important, right? Is so important. You got to trade, and I think one of the most important thing is trading with structure and trading what you see, not what you think is going to happen, and because then it's gambling. And anyone that's new to this business or new to this industry or thinking about coming into this, 100% you've spoken to someone or somewhere down the road and they've said, oh, you want to do day trade? And that's just like gambling. That's like gambling. Well, the people that don't know how to day trade or the person that's probably said it to you, it's because they didn't know how to day trade. It's because they didn't do any market analysis. They didn't understand. There are people out there that are making millions doing this. But that 1%, they love being the 1% because they're just eating everybody else's money up. That's what they're doing. The odds are in their favor, overwhelmingly in their favor. You know who that 1% is? It's the banks, right? It's the major banks. It's all those people, and this that handful of smart people that are doing the things that everybody else is not doing. Do you know what I mean? And that is, again, and it's not a secret. It's not a secret out there. All that information is out there. It's just 99% of people can't be bothered to do it. That's the truth. They can't. They're rather really sorry. What do you mean? They're rather sorry about. They'd rather try and follow someone else and try and make the money, right? Or they think there's just a shortcut to greatness, and there isn't no shortcut.
I think on that, just following someone else as well. Like Minz has said this before, that if you are joining this group, this isn't like a signal service or anything, because ultimately, when the dynamics of a chart change and things happen out of expectation, there's times that where even us three don't agree on which way it's going. There's times that Minz is in a call and we're in puts or something, right? But at the end of the day, it's having that group of people around you that you can bounce your ideas off, because without that, it's quite a scary place. I think the trading floor, if you don't have anyone to bounce your idea off, to say, oh, this is what I'm seeing, or this is what you're seeing, it's difficult at times.
There was an incident during the Christmas period, or no, I think it was the first day they were trading live, where I was in calls and I think Kurai said this could be a inverse cup handle. I could not see it.
Mm-hmm.
Out of the trade by the time it materialized, and it's just And I always say this to people. I always say this to people as well: is if you do your own analysis, okay, and you take a loss, only person to blame is yourself.
Mm.
And in options, especially, by the time I've typed the trade that I've taken,
It's gone.
you cannot do a signal, sir. You cannot take that signal. It's it's impossible because the trade is already gone. And in terms of also as well, something that I want to touch on is we get dopamine from winning trades. Okay, let's be honest. All right, winning the trade is a amazing feeling. Like it's it gives you ecstasy. It's ecstatic. Yeah, but you also have to be disciplined enough to sit on your hands when nothing is materializing. Okay, and this is why your pre-market plan will avoid you taking losses. If you look at the pre-market plan or look at what we post pre-market and say to yourself, okay, I'm only going to take a call here and I'm only going to take a put here. Anything else is noise. It stops you from opening the chart and the market opens and you're sitting. And trust and believe, the longer the market goes on, your fingers will start to itch. Okay?
Yeah.
And you're like, I'm dying to, I've seen it in the group. I'm dying to take a trade here. I'm dying to take a trade here. And you have to tell yourself, follow your pre-market plan. Okay? Because that is where the risk to reward is. That is where your A plus setup is. And I always say this to people, find an A plus setup for puts on the pre-market plan and find an A plus setup for calls. Where would be an A plus setup for calls and where would be an A plus setup for puts, and only trade that. Okay? Anything in between is FOMO and itchy hands. And that's what you have to tell yourself, because otherwise you will take a trade in between that range and you'll end up making a loss.
Right. I think the newbies or new people that come along or listening to this or watching this, right? That those pre-market plans is something that we teach, right, in the bullish bear. Is you're not going to, and that's what I love about this community is, let's just say you are doing your pre-market plan on yourself, you've got people that you can bounce your ideas off, right? This is what I'm seeing. Is this what you're seeing? You know, do you think that I'm accurate in the way that I've drawn my levels or I've drawn my channels? You know, is this right? You know, and what better people to learn it from than people that actually are showing success in trading, right? Rather than just doing it yourself, or let me go and look at Joe Blogs on YouTube who's also doing it or is doing a live in Instagram feed today that you have no idea who the hell that person is or what he's using to come up with his pre-market plan. You have zero idea of it, right? You're literally flying blind. Here you're not flying blind. You're flying with people that are exactly in the same boat as you are, you know?
And that's why I designed this course, really, because I felt like the 90% and 99% statistic is very real. And the main reason why we designed this course is because if we can minimize that pain in the first 3 months or the first 6 months or
Mhm.
first year and give you someone that, or give you a community of people or senior traders that you can turn to at moments like this to reassure you that this is normal what you're going through, it may actually turn more traders into successful traders.
I think
Definitely.
it was the other day as well. I think one of our other members went live for the first day and ended in red for the day. But ultimately, yes, that person was down after it. But I sent them a message to say, look, this is normal, and the day that that person picked to trade was bad. It was the day before the news, and typically we all know that's choppy and it's difficult to trade. So, reaching out, showing the support, because even I've had those days where I've just decided to trade on the wrong day, and it has been my first day, had a loss, and then it's affected me. But having the people around you that have gone through those things to help prop you up is so valuable. And I can't put even a number on how valuable it is, because like I mentioned before, if it wasn't for the likes of Mins and Yaku, even I probably wouldn't be here right now, because I might have quit as well.
So yeah,
Definitely.
I think when I look back and say the trades that I've taken, going back on my journaling, and journaling is very important. especially with your losses, because it will help you identify your common mistakes that you always make. And what I used to find in the beginning was the trades that were red just didn't follow what I had planned at the start of the day. And it was always down to me not having the patience to wait for my plan to materialize. And you know what? Sometimes you open the charts and you think, oh my God, it's no way going to get to there before I can take a put, or it's no way going to get to there before I can take a call. But trust me, in those 6 hours, a lot can happen.
Yeah.
A
And
lot.
what is the worst? What is the worst that happens if that level doesn't hit and you haven't taken a trade? What's the worst that happens? You haven't lost no money. Well, you
Yeah.
haven't made the money, but you haven't lost no money. And on the subjects of losses, what we are doing is we're talking about and ultimately show you how to minimize those losses, because losses are going to happen. We're not going to say they're not going to happen. They are 100% going to happen, but the minimizing it is the key for you to become a successful trader. And strategically and importantly, we've started our first episode with losses, whereas most other people will be like, let's talk about the wins, let's talk about what you can make, let's talk about what I made, and blah 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 blah, right?
And,
You know, I want to talk about losses because that's going to happen. And as a novice trader, as a beginner trader, the odds are stacked against you to make money right now. Do you know what I mean? So understand how to minimize your loss before you can work out how to make the money.
and you know what? I remember this. There was a day in December where I waited 5 hours for my pre-market plan to materialize. And my pre-market plan is always the same: wait for pre-market high or low to break. We chopped in between both for 4 hours and 45 minutes. We started heading to pre-market low. I took my trade at the 5th hour, and it was a big trade, and I made good money.
And
But
that's
that,
the best feeling, right? It's the best
and you
feeling.
know what? No trade is a good trade. I tell you that now, because you are protecting your capital.
Mm.
Yeah, you're protecting your capital. There's no trade is a good trade. It's better than half-heartedly going in with no conviction, with no idea where the market is going.
I think the worst thing is taking a trade that's not in your plan, doesn't work out. It gets to a point where you're then either not in a position to take your pre-market plan trade, or I don't know, you hit your quota for trades of the day, or you don't have enough cash balance to buy another contract. But where you said you would take a trade and that materializes, that stings twice, because you placed a trade earlier in the day that was outside of the plan, taken the hit, and then your trade has materialized. And sometimes that loss you take might not be covered by that pre-market plan trade, because if it's a large loss, say if it's £200 loss and your pre-market plan trade was only £150 win, you're still minus 50, right? But if you had stuck to your plan, avoided that £200 win, you're 150 up for the day, and you've got the confidence, and you end the day in two different mindsets.
And that's the last thing that I want to touch on as well. And what you cannot do as well is, let's just say I normally tell everyone take 3 trades a day. There's normally 3 perfect setups a day. Okay, 3 A+ setups in SPY. If you take your first trade and you lose, say, £30, and your second trade is a green trade and it gets up to 30, and it's your exit plan, you have to get out. Don't think to yourself, I need to make another 30, otherwise this trade is pointless. You can never ever let your last trade affect your next trade. You can never let that happen. Okay? Do not think to yourself, I'm going to try and damage control now. I lost 30 on my first trade. My next trade, one MS contracts goes up 2 or 3 points. You're plus 30, but you're still holding because now you think to yourself, I haven't made any money. You have to still follow your exit plan and your risk management.
I must say though, on that point, I even catch myself sometimes when I'm going down into that sort of thought process that, oh, you've just lost 20 quid, you need to make it back. And I'm like, no, no, no. And that's where the discipline comes back, right? Where you're like, okay, I've done this before. I've tried to chase £20 loss. I've ended the day on minus 60. I felt even worse about it. And having those journeys and failing like that has just ultimately teaches you a lesson for the next time. And that next time, when you do lose that £20, you're not going to then revenge trade or chase that loss to make it back. And when your opportunity does arise, you have to go back to having the conviction to take it.
Yeah.
All right. Is there anything else you guys want to add?
I think so. I think just to like kind of summarize, if we're wrapping this episode up, just to summarize really about losses. I guess kind of the takeaway for me, and I hope our listeners get from this really is how the best way to minimize your losses is gonna be is having a pre-market plan. First of all, do your pre-market analysis, whether that's the night before. It definitely should be the night before, first of all, or the night before after your trading day, the day before, right? You go back, you're looking at where you took your trades, right? Did you find the right perfect entry point? Did you follow your market, your pre-market plan on that day, right? And then see where you could go in, right? Then obviously, we didn't really touch too much about hard stop losses on here just now. I just thought about that. We can talk about it another time if you want. But within our community, we show you how to actually have a definite hard stop, meaning if you're trading $100 and you say to yourself, okay, my plan is I don't want to lose no more than 20 on this. My risk tolerance is 20%. You can put a fixed number on that. So if the trade goes inversely, then trade goes against you, then you can have a hard stop. So whatever happens, the system will basically close your trade out and you won't lose more than 20, right? We show you how to do that as well. Okay, so having that hard stop is important. I think is vitally important to minimize your stop losses. Those two things for me are like real two big takeaways.
I think for me, the main takeaways is just have discipline, have consistency, keep persevering. And I personally don't think it's impossible. Nothing is impossible when it comes to trading, as long as you have those three characteristics. And paper trading and however you practice whilst you're going through the course, it will teach you that, and you will probably learn a lot more about yourself than you actually realize. So there's that also 1% figure. Whenever someone says a stat like that to me, there's only 1% of people that succeed. It's just a challenge, really, right? I want to be part of that group. I want to be that 1%. Like, there's no one that can't tell me I can't do it. Basically, there's that saying in Pursuit of Happiness, the film. Don't let anyone tell you can't do something. If it's your dream, you gotta chase it. So keep chasing dreams, guys.
Yeah, my takeaways again: trade your pre-market plan. If you take a loss, learn from it, turn that loss into a win, journal it down, write it down next to your laptop where you trade from so you make sure you don't make the same mistake again. Do not let a £20 loss turn into a 40. Whatever your risk tolerance is, no matter what the chart does, you have to get out at that point. You can go back in later. And again, just treat this as a marathon and not a sprint. Okay? Work on your consistency, even if it's £20 a day. Okay? Or the only difference between making £20 a day and 200 is just more contracts. So if you can be consistent on a regular basis and be green, the 200s, the 2000s, the £10,000 days will be coming. All right? Fantastic.